Hi everyone. So today module 2, day 2 of Hedge Fund series. Yes. So this module will cover the key investment and trading strategies used by hedge funds. And each strategy is designed to generate returns while managing risk in different market conditions. So, yes, we will discuss how hedge funds profit in bull and bear markets and how they use macroeconomic indicators and the role of advanced technologies like AI and machine learning in hedge fund tradings. Okay, so today I will cover the his module 2 as I discussed all modules in yesterday's session in which I discussed the module 1 and I discussed all modules what I will cover in upcoming videos as I started this series of his fund. Okay, so I think there were 6 module. Okay, so module 1 I have discussed earlier, and today I will discuss the module 2 in which hedge fund strategies, that is long and short his equity strategies, global macro strategy, and even event driven strategies, arbitrage strategies. So yes, there are 4 strategies available here. This is intermediate level of the series. Okay, so start with the long and short equity strategies. How hedge fund profit from market movements. So yes, a long and short equity strategy is one of the most commonly used hedge fund strategies. It involves taking long position in undervalued stocks, like expecting their price to rise, and short position to overvalued stocks, in which we are expecting their price to fall. So this helps hedge fund generate returns in both bull market and bear market, rising market and falling market. Okay, so long short equity strategies is something that in which we just take the long position in undervalued stocks and take the short positions in overvalued stocks. Okay, and this strategies, as I said before, that this strategies help to generate funds and generate returns in both rising and falling market. It means that bear market and bull market, in both market, if we apply this strategy and hedge fund strategies, then we can get the profit. The second is global macro strategies. No. Firstly, I will discuss the examples and case study like successful long short hedge strategy. Yes, this terms is remain here. So yes, suppose a hedge fund identifies company A as undervalued and company B as overvalued, right? So if bias, it means that uh, uh, if anyone hedge fund identify that company A is undervalued and company B as overvalued, so it buys long. It means that long means what? Buy, and short means sell. So it buys share of company A while short selling shares of company B. If company A's stock price rises and company B's stock price falls, the hedge fund profit from both trades. Okay. So as you can see कि that yes, कंपनी ए का जो प्राइस है वो बाय कर रहे हैं हम कंपनी ए के शेयर को, एंड वी आर जस्ट शॉर्ट सेलिंग द शेयर ऑफ कंपनी बी. So here we what we get, if company A's stock price rises, then we can get the profit, and if company's B's stock price falls, then we can also get the profit. So here's one profits from both trades, right? Now the second thing is global market strategies. What is this? Yes, how hedge funds use macroeconomic indicators. The first thing is macroeconomic indicators and their impact. So yes, global macro hedge fund analyze economic trends at a global level, right? Including interest rates, inflation, GDP growth, and trade policies. And yes, they invest in currencies, commodities, bonds, and equities based on macroeconomic trends. If we take example, then hedge fund may sort the Japanese yen if it expect that Bank of Japan to lower interest rate. Okay, if the US Federal Reserve's rises interest rates, then hedge fund might short gold because the higher rates reduce gold's appeal. This is something. If we take a case study, then what is this? Understanding the central bank policies. Hedge fund closely monitors central bank decisions such as Federal Reserve, USA. Interest rate hikes lowering impact stocks, bonds, and forex. If European Central Bank (ECB) monetary policy affects the euro and European markets. And the third example is People's Bank of China. Policies influence commodity prices in emerging markets. So yes, you can understand the role and the impact of these things. The third thing is event driven strategy. What is this? In this, merger and acquisitions come, distressed securities are come, activist investings come. So yes, driven hedge fund exploit market inefficiencies caused by corporate events like merger, bankruptcies, and acquisitions. Merger and acquisition arbitrage is what when company X announce a merger with company Y. ठीक है? Hedge fund buy companies Y's stock if they believe the merger will be successful, and they may also short company X if they suspect the deal will face regulatory hurdles. What I told you that when company X announce a merger with company Y, hedge funds buy companies Y stock. Okay, if they believe that the merger will be successful, then only they can yes, they can buy the company's Y's stock, and they may also short company X if they suspect the deal with face regulatory hurdles. If we take an example, Warren Buffett's Big's hire Hathaway has used merger arbitrage by buying stocks of companies that were acquisitions target. Now the thing is, activist investing is what? Yes, hedge fund buy a significant stake in the company to influence management decisions. They push for higher dividends, leadership changes, or cost cutting to improve stock prices. Right? So yes, this is activist investing. I have taken an example. Hedge fund buy a significant stake in the company to influence management decision. They push for higher dividends, leadership changes, or cost cutting to improve stock prices. Example: uh, Carl Kun Can is a well-known activist investor who pressured Apple to return more cash to shareholders. So this is activist investing. Now the distressed securities. Hedge fund invest in companies. Here is distressed securities. Hedge fund invest in companies near bankruptcy and buy their bonds or stocks at a discount. If the company recovers, this investment yield massive profits. So this is distressed securities. Oak Tree Capital Management specializes in distressed investing, buying debt from struggling firms. So this is the example of distressed securities. Now the last one is arbitrage strategies. What is this? This is also called market neutral strategies. So in this, these strategies involve exploiting small price difference in different market or securities. First is statistical arbitrage. What is this? In this, we use the data driven models to find the price inefficiencies between similar stocks. Trades are executed rapidly and in high volume using algorithms. If we take an example, a hedge fund might notice the Ford stock always lags behind GM stock by a few minutes. It can buy Ford before it catches up to the GM's price. Okay. The second is convertible arbitrage. What is this? It involves buying a company's convertible bonds. What is convertible bonds? The bonds that can be converted into stocks is called convertible bonds. Yes. So what I told you? Yes, convertible arbitrage. It involves buying a company's convertible bonds while short selling the company's stocks. In this, just we buy the company's convertible stocks and while short selling the company's stocks. How this will give the benefits? This benefits from volatility while minimizing risk. Okay, so yes, we take example like a hedge fund buy Tesla convertible bonds and short Tesla stocks to hedge against price movements. Now the last one is fixed income arbitrage. What is this? This is nothing but yes, it is also exploits price difference between different bonds. Here the term is fixed income, so we are just taking terms of bonds because in stocks there is not fixed income. So it exploit price differences between different bonds. It often used in interest rate trading. Okay, just understand by taking an example, like his fund might buy a US treasury bonds while sorting a similar European bond if it expect US interest rates to change. Okay, this is something that is covered in this module. I hope this would be the clear. And there are some more terminologies are also, so it is not mentioned over here, but if you tell me, then I will provide you the notes also. If you need notes, then you can do comment in comment box, and then I will provide the notes to you. Okay, so the fifth thing is that I have missed to write in this module, so I'm just covering by orally, that not orally, I will use the whiteboard. Okay, so in this, what I tried to cover: quantitative and algorithmic trading in hedge fund. Okay, quantitative and algorithmic trading in hedge funds. Okay, so what is this? Yeah, tell me someone. Okay, I'm just telling you. Algorithmic versus discretionary trading. What is this? Algorithmic trading is what? It uses computer models to execute traders automatically based on predefined rules. Okay. And now the terms discretionary trading is what? It relies on human decision making based on market analysis. So example is hedge fund like Reliance Technologies use AI based quantitative strategies for trading. So now the thing is machine learning and AI in hedge fund, how it is used, and how what the use of AI in and machine learning in hedge fund. So I'm just explaining it. AI analyze big data to detect patterns and predict the stock movements used in high frequency trading to execute the thousands of trades per second. If we take example, two sigma investment, in which it uses AI and machine learning to optimize hedge fund trading strategies. Now, the high frequency trading is what? Execute trades within milliseconds using powerful computers, and the profit come from teeny price changes in stock and forex. Example: firms like Citadel Securities and Virtue Financial dominates HFT trading. Okay. Now the third is cryptocurrency and alternative asset hedge funds. This is also a point. Cryptocurrency, cryptocurrency and alternative asset hedge funds. Okay. Yes. So what is crypto hedge funds and their performance? In crypto hedge funds, invest in Bitcoin, Ethereum, and altcoins. So the strategies include hodling, arbitrage, and DeFi trading. Okay. So yes, example, Pentra Capital is a leading crypto hedge funds that has invested in Bitcoin since 2013, alternative asset class, real estate, commodities, and art funds. So hedge fund also invest in gold, oil, real estates, and even art collections. These assets provide diversification and inflation protections. The example, Masterworks is a hedge fund that invest in fine arts. So yes, that's all the topics are covered in this module. Now the part of conclusion. So in this topic, in this session, I have covered what? How hedge fund use long and short strategies to profit in any market, the role of macroeconomic trends and the central bank policies in hedge fund investment, event driven strategies like merger and acquisition, activist investing, and distressed securities. Okay, different arbitrage strategies and how they exploit market inefficiencies, the power of algorithm trading and machine learning and AI in hedge funds. Okay, the rise of crypto hedge funds and alternative investment like real estate and art. So yes, these things I have covered in this video. Actually, I missed 2 points to write here. That's why I have used the whiteboard. Now the module second has completed, and if you need notes, then I have also mentioned earlier that if you need notes, then you can do comment in comment box, and then I will provide the notes that I have. Okay. So bye. Take care. Stay tuned. Happy learning. Happy journey.